I think there are a lot of reasons why, as we're in the period of economic uncertainty, kind of rolling into rate hikes and everything, that gold was going to struggle. I think we're past that, and I think when I think about $1,900 gold and ask the question as to how and why it's moving up here, I think a lot of that has to do with central bank activity, and we've seen unprecedented gold buying from central banks, and I don't think that's done. I don't think because we are sort of at the pivot of interest rates that central banks are going to stop buying gold. So I think we're in maybe a little pause here. Tough to call it a pause when it's been up this quickly, but no, I think the longer term trend is very, very positive. But what that gold price, what people haven't really started thinking about yet on the gold price is, what does this mean for gold producers? What does it mean for cash flow for the gold mining industry? Because interestingly, many of the producers ran their budgets for 2023. You think about when they were setting budgets in the fall, a lot of them ran their budgets at $1,500 or $1,600 an ounce. So you have gold producers today sitting with $400 to $500 per ounce of excess free cash flow, like genuinely free cash flow. I think that is what I'm really excited about, how that gets redeployed, either given back to shareholders and redeployed, or the companies themselves using that ultimately to need to bolster their development pipelines because they just haven't invested in exploration and development for a decade. I think and an unexpected cash cushion. And that's one of the ones that, the money's not spoken for at the beginning of the year, I think can help free up for things like strategic investments, for things like mergers and acquisitions opportunities, where they really are starting to think about having the flexibility to think a little bit longer term. This is really the first regional exploration that we've done in First Mining since acquiring the project in 2016. And a lot of this has to do with in 2020 and 2021, we were able to consolidate, build the land package now to over 70,000 hectares. So this is really a truly district scale exploration potential, where we think we've got now the mineral tenure covering most of the prospective geological structures that control mineralization in this belt, which has been largely overlooked going back decades and decades. I mean, it was originally discovered around the same time as the Red Lake camp, but access and infrastructure were more of a challenge. So it only ever saw maybe a tenth of the exploration spend that you saw in Red Lake or even in Pickle Lake. So there's a lot of gold to find here. And for us now, having built a great geology team really last year, going back to first principles, mapping, sampling, soil sampling, we flew a big district scale geophysical program, MAG and EM, to be able to really help in identifying targets. And we've got a bunch of targets that already have drill holes in them, which we've never really talked about before in this district, but we're not starting from scratch here. So we have 4 or 5 targets that we want to test in this winter program, a few holes into each of them, and then use that to be able to assess, go back, reprioritize, and hopefully on success. We've been working with the Indigenous communities around Springpole and really trying to listen to how the communities want to go through the environmental assessment process, or really through their own assessment process. So we've agreed to fund what I think will be the first Anishinaabe-led impact assessment, which would be conducted by the 3 main communities around Springpole. And I think we're excited about that. It's something that is really important to the communities to make sure that what they find important is reflected in this assessment. And ultimately, a lot of that same material ends up getting reflected in the environmental assessment, federal and provincial, that we're going through as well. So we're really excited. It's just kind of getting kicked off. I think advisors have been selected, and it's something that we're pretty proud to be working with the communities on, something that's a little bit groundbreaking. We've consolidated, really for the first time since the 1950s, consolidated ownership of the Duparquet project in one entity. And so for us, the work program has really started as environmental baseline work. So there is the past producing mine there, some environmental legacy that really does need to be better understood. So we're starting on that work, and at the same time, We've spent most of the last 3 or 4 months digging into a new understanding of a modern geologic model at Duparquet, really starting to look at, we put out a resource in September, but starting to look at what work would we need to do to further that resource. So in some senses, looking at some of the infill drilling opportunities that we'd see there to increase confidence in it. But at the same time, using this new structural understanding to figure out where we'd put some exploration spend to demonstrate that this project can still grow, because it's really sparsely drilled below about 500 meters. And this is the Abitibi, Michael. We know the real deposits don't start until a kilometer down. So we'd like to do some deep exploration holes, but it's open along strike in both directions. And there's a couple of satellite pits that fit their way into the Clifton Star 2014 PFS and sit in our resource that are really limited, not from drilling, but just they were some of the last things drilled and never followed up on, because of the ownership structure and because of the downturn in the gold market. So we're really excited about getting going at Duparquet. We've had great community engagement from the community as well. Went to our first community meeting in Duparquet in November, and I think just have a fantastic level of engagement in the community. So we're excited about that.
Heading further east.
Newfoundland is now pretty much is being moved forward by our partner Big Ridge Gold, who has been, they've now spent, I guess, more than the $10 million to earn into the 51% at Hope Brook. They're doing great work. I think they're at the tail end of a drill program. They should have the final results out from that drill program here shortly, and then moving to a resource update, which I'm really curious. They've had some really good exploration success at defining some new mineralized zones in between 2 previous areas that we had resource. So curious to see sort of how that evolves, how they're modeling it up, and we're hoping, as we do for all of our partners, on great continued exploration success and market awareness. And we always loved that project. It just needed more energy and time and focus and capital than we were going to be able to give it, given that we've got 2 5 million ounce gold projects that we need to be moving forward. So once again, First Mining Gold is opportunity blessed, and we really had to kind of pick our spots, but we also had to pick great partners, be it Big Ridge, be it Ateco Minerals, which is more than doubled the size at Pickle Crow, be it Treasury Metals, which is doing great work at the Goliath Gold Complex too. We actually had a few pretty existential moments in the fall, particularly because to close Duparquet, it was in total about 10 million of cash to go out the door.
Good timing there.
Yeah, nothing like signing a big check on the 15th of September, going into what was one of the worst markets we've seen in recent memory. So, one of the beauties of how we have set up First Mining, and listen, this is really a blessing of the portfolio that Keith Neumeyer put together in 2015, 2016. We've got a lot of these projects. We've got partners who are spending money advancing the value of these projects. We still have those project interests. We've got a 30% interest in Pickle Crow. We've got still a 49% interest in Hope Brook. Our partner will earn up to 80, but we have a 20% interest. Both of those carried through to major milestones. And we have the royalty portfolio that we built as we've found partners and worked the ownership interests in these projects. So we ended up in December selling one of our royalties at Goldlund, that's on Treasury Metals ground, for 9.5 million Canadian.